All right, so you know how everyone's always talking about recessions and what triggers them?
Oh, yeah, definitely. Like, it's always a hot topic, especially when things start feeling a bit shaky.
Exactly. And, technically speaking, a recession is 2 consecutive quarters of the economy actually shrinking, right?
That's the textbook definition.
Okay, so that's why I wanted to bring this up today, because the Atlanta Fed just made a prediction that has everyone buzzing.
Oh, really? What's that?
They're saying that the U.S. economy might actually shrink in the first quarter of 2025.
Hmm. That's interesting because that would be the first time since early 2022 that we've seen a contraction.
Exactly. And you know what's really got everyone even more on edge?
What's that?
The Fed didn't really give a whole lot of explanation for why they're making this prediction.
Ah, I see. So that's just fueled even more speculation and opinions flying around.
Exactly. It's like everyone's trying to read the tea leaves, and some of it's definitely bordering on fear-mongering.
Yeah, that's understandable. But it's important to separate fact from fiction, right?
Absolutely. So today on our deep dive, we're going beyond those attention-grabbing headlines to figure out what we can actually learn from the data.
I like it. Cut through the noise, get to the heart of the matter.
Exactly. We're going to explore the forces at play and hopefully help you feel a little more confident about navigating these uncertain economic waters.
Sounds like a plan. Where should we start?
Well, one of the things that jumped out at me from our research was this report from MarketWatch about a huge surge in imports during the first quarter of 2025.
Oh, yeah, I saw that too. Seems like businesses were stockpiling goods like crazy.
Yeah, it's almost like everyone just decided to hit the buy button all at once.
Well, it makes you wonder why, right? Like,
Yeah.
what's driving that kind of behavior?
Exactly. I mean, why would businesses suddenly feel the need to stockpile everything?
Well, one likely factor is the looming possibility of those new tariffs everyone's been talking about.
Oh, that makes sense. So if businesses are expecting import costs to go up because of tariffs?
Then it makes sense to try to import as much as possible before those tariffs take effect.
Right, like stock up now to avoid paying more later.
Exactly. It's a smart strategy for individual businesses in the long run.
Okay, so that makes sense from a business perspective, but how does all this impact the bigger economic picture? I mean, is this import surge a good thing or a bad thing for the economy as a whole?
Well, it's a bit counterintuitive, but this kind of import surge can actually hurt economic growth in the short term.
Really? I wouldn't have guessed that. How does that work?
Basically, all that spending on imports gets factored into GDP calculations, and a sudden spike like this can make the economy appear to be shrinking, even if businesses are doing well.
So even though businesses are spending money, it's not necessarily translating into positive GDP growth because all those dollars are going overseas.
Precisely.
That is pretty counterintuitive.
It is, but it's important to remember that the economy is a complex system with lots of moving parts.
Okay, so we've got this import surge happening, which might not be as great for the economy as it seems at first glance. But what else is contributing to this feeling of economic uncertainty that everyone seems to be talking about?
Right, well, there's definitely no shortage of economic hot topics these days.
Like what? Give me the rundown.
Well, we've got those ongoing trade tensions and the potential for new tariffs to actually go into effect. We've got the Doge government doing a lot of restructuring, which includes layoffs and department shakeups.
Yeah, I've been following that. It seems like they're really trying to shake things up over there.
They are. And then, of course, there's the ever unpredictable world of cryptocurrency.
Oh, yeah. Bitcoin's been on a wild ride lately.
It has soaring 1 minute, crashing the next. It's enough to make anyone's head spin.
It's true. It feels like there's just so much happening all at once, it's hard to keep up.
Absolutely. And all of this uncertainty, it weighs on investor sentiment, which leads to that roller coaster ride we've been seeing in the stock market.
Okay, so explain that to me like I'm 5.
Yeah.
Why does uncertainty in the economy make the stock market so volatile?
Basically, when investors feel uncertain about the future, they tend to get nervous.
Makes sense. Fear and uncertainty don't usually go hand in hand with risky investments.
Exactly. And that nervousness often translates into selling off assets.
So they're basically trying to get out while they still can.
In a way, yeah. And that selling can further destabilize the market, leading to even more volatility.
It's like a vicious cycle.
It can be.
Yeah.
And it makes it really hard for investors to make informed decisions.
Yeah, it's like trying to plan a cross-country road trip without knowing the route or the weather conditions.
I like that analogy. It's tough to pack, let alone feel confident about the journey.
Right. And speaking of uncertainty and impactful spending, we can't forget about the role of the U.S. government in all of
Oh,
this.
absolutely.
Hmm.
The government plays a huge role in the economy, whether people realize it or not.
It's easy to forget about that
It
sometimes.
is. But it's important to remember that the U.S. government is actually the biggest spender in the economy,
Right.
not giant corporations.
Wow, I never really thought about it that way. But you're right when you consider all the different areas the government is involved in.
Exactly. And its decisions about spending have a ripple effect that touches every sector.
So when we talk about economic uncertainty, government spending is a huge factor to consider.
It is. And it's not always clear what the long-term consequences of those spending choices will be.
Right, because on the one hand, government spending can stimulate the economy, right?
It can. Injecting money into various projects and programs, creating jobs, boosting economic activity in the short term.
I have a feeling there's a but coming.
There is. The downside is that all this spending often leads to increased government debt.
And that can have long-term consequences.
Exactly. Things like inflation and economic instability. It's a delicate balancing act, for sure.
So are you saying that government spending is basically a double-edged sword?
In a way, yeah. It can be helpful in the short term, but potentially harmful in the long run.
It sounds like a tricky situation to navigate.
It is,
Yeah.
and that's why it's so important to have informed discussions about these issues.
Well said. It reminds me of that quote from one of the articles we read. The most expensive kind of money is free money.
Oh yeah, that's a good one. It really makes you think about the long-term costs of government spending, even if those costs aren't immediately apparent.
Right, because someone always ends up footing the bill one way or another.
Exactly.
Yeah.
And speaking of volatile economic landscapes, let's talk about cryptocurrency.
Oh, yeah, crypto. The land of digital gold rushes and those wild price swings.
Exactly. Bitcoin's been especially wild in early 2025, wouldn't you say?
For sure. It seems like it's reacting to everything these days, political pronouncements to cryptic tweets.
Right. It skyrocketed when people thought the U.S. might become a global crypto hub, then crashed when those ambitions faced some setbacks.
And then surged again after just a single tweet about a potential strategic reserve of Bitcoin.
It's like a roller coaster. You never know which way it's going to go next.
Makes you wonder if those thrill seekers are loving it or feeling a bit queasy.
Probably a bit of both, I'd imagine.
So what's the big takeaway here for our listeners when it comes to cryptocurrency, especially in this climate of uncertainty?
The key is to remember that volatility is part of the game, especially with assets as liquid as crypto.
So buckle up.
Pretty much. Don't let fear or greed drive your decisions.
That's good advice for pretty much any investment, not just crypto.
It is, but it's especially important in the crypto space where things can change so quickly.
Right. So informed decision making based on a clear understanding of your own risk tolerance and financial goals, that's crucial here.
Absolutely. Now let's shift gears a bit and talk about a specific example of economic uncertainty that's been in the news a lot lately.
Oh yeah, let's get into that after a quick break. Okay, so we talked about how businesses are reacting to potential tariffs with that import surge and how the overall economic climate is feeling a bit shaky. But let's zoom in on one specific area that's been making headlines, Doge's government restructuring.
Right, and this is where things get really interesting. You have to look at the interplay between government spending debt and their overall impact on the economy.
You're talking about those Doge layoffs and department cuts we've been hearing about. I have to admit, I'm not entirely sure what to make of it all. Is this a good sign or a bad sign?
It's not so simple as just good or bad. It's more about understanding the potential consequences, both positive and negative.
Okay, fair enough.
One key point our source highlights is that the Doge government is the single biggest spender in the economy, even more than massive corporations.
Wow, I hadn't really thought about it that way, but it makes sense when you consider all the different areas the government is involved in.
Exactly. So when Doge starts tightening its belt and cutting spending, it's like reducing the flow of a major river that feeds into the economic ecosystem.
Okay, so paint that picture for me a little more. What exactly are the effects of that reduced spending?
Well, for starters, it means fewer government contract for businesses, which can lead to those layoffs we were talking about.
Right, and those laid off workers then have less money to spend, which impacts other businesses and so on.
Exactly. It's that ripple effect I mentioned.
So it sounds like these Doge cuts could actually slow down the economy. I thought reducing government spending was supposed to be a good thing, fiscally responsible.
It can be in the long run.
Yeah. Okay, so explain the long run versus the short run for me.
Basically, in the long term, reducing government spending can help to bring down the national debt and potentially help curb inflation.
Okay, like putting yourself on a stricter budget so you can get your finances in order.
Exactly.
Yeah.
But in the short term, these cuts can also slow down economic growth because you have less money flowing through the system.
So it's like a trade-off, short-term pain in exchange for potential long-term gain.
Exactly. And this is where things get even more complex because our source also points out that Doge has been funding a lot of its recent spending through debt, adding trillions of dollars to the national debt.
Oh boy. Yeah, that doesn't sound sustainable.
It raises some concerns about the long-term sustainability of this approach.
Yeah, how long can they keep kicking that can down the road?
It's a valid question, and there's no easy answer. But it ties back to that quote we discussed earlier. The most expensive kind of money is free money.
Right, because eventually someone has to pay the piper.
Exactly, whether it's through higher taxes down the road, or inflation, or some other economic mechanism.
It sounds like our source is really urging listeners to become more financially savvy, to really understand how these forces work so they can be better prepared.
Absolutely. Knowledge is power, especially when it comes to navigating these choppy economic waters.
Couldn't agree more. And speaking of navigating choppy waters, let's bring this back to the stock market for a moment. Remember how we were talking earlier about how uncertainty can lead to sell-offs and drive prices down?
Yeah, investors get nervous, they start selling off assets.
Right, but could this also be an opportunity? I mean, if prices are dropping, doesn't that mean there are potentially some bargains to be had for savvy investors?
That's a great point. For those investors who are able to keep a cool head and not get swept up in the emotional frenzy, these dips in the market can present buying opportunities.
Okay, so how do we as individual investors actually do that? How do we stay grounded and avoid making impulsive decisions when the market gets turbulent? Because it's easy to get caught up in the fear and anxiety when you see your portfolio shrinking.
It is. But it all comes back to that idea of being informed and having a clear investment strategy.
So knowledge and planning.
Exactly, because remember, recessions are a natural part of the economic cycle.
They are. It's like we were saying before, it's not a matter of if, but when.
Exactly. So instead of fearing them, we can learn to anticipate them and even find opportunities within them.
So like turning lemons into lemonade.
Kind of, but with a lot more research and careful planning involved.
That makes sense. So how do we do that? Where do we even start?
Well, one important step is diversification.
The old don't put all your eggs in one basket strategy.
Spread your investments across different asset classes, stocks, bonds, real estate, maybe even a little bit of gold or other precious metals.
Right. That way, if one area of the market takes a hit, you're not completely wiped out.
Exactly. Diversification helps to manage risk.
Okay, so diversify. But what else can we do to prepare for a potential recession?
Well, it's also crucial to have a clear understanding of your own financial goals and risk tolerance.
Like, what am I saving for? Retirement, a down payment on a house, my kids' college fund.
Exactly. Once you know your goals, you can start to develop an investment strategy that aligns with those goals and your comfort level with risk.
So it's not just about having money, it's about having a plan for how to use that money.
Exactly. And this is where it becomes really important to educate yourself about different types of investments and how they perform in different economic conditions.
So like doing your homework, learning about the different players in the game.
Exactly. Because some investments tend to do well during times of inflation, while others might be more stable during a recession.
So understanding those dynamics can help you make more informed decisions about where to put your money.
Exactly.
So it sounds like knowledge is power, but it also takes some self-awareness, knowing your goals, knowing your risk tolerance. It sounds like a lot of work.
It is an ongoing process, for sure, but it doesn't have to be overwhelming.
I hope not.
There are plenty of resources available to help you learn about investing and personal finance. You can start by reading books, listening to podcasts, like this one,
Of course.
or even taking some online courses. The key is to be proactive and take control of your financial future.
I like that. Take control. Don't just let the economy happen to you.
Exactly. And one final thought I'd like to leave our listeners with is this. Don't let fear be your primary motivator.
Oh, that's good advice for life in general.
It is, but it's especially important when it comes to financial decisions because it's easy to make impulsive choices when we're feeling scared or uncertain.
Like selling everything when the market dips.
Exactly. But those decisions aren't always in our best interest in the long run.
Right. So what's the alternative? What should we be doing instead of letting fear drive the bus?
Try to approach financial decisions with a sense of curiosity and a desire to learn.
I love that curiosity over fear. That's a great takeaway.
So instead of panicking when the market dips or the headlines get scary, take a deep breath. Remember what you've learned and ask yourself, what's the opportunity here? How can I use this knowledge to make smart decisions for my future?
I love that. So we're ending on a note of empowerment.
Exactly, because that's what we're all about here on the deep dive. Equipping you with the knowledge and tools you need to not just survive, but thrive no matter what the economic climate throws your way. The question isn't if a recession is coming, but how can you be prepared to not only weather the storm, but potentially find opportunity amidst the chaos?
That's a much more empowering way to think about it. Not if, but how. So how do we prepare for a potential recession?
Mm.
Besides, stocking up on canned goods and hiding cash under our mattresses.
Well, diversification is always a good starting point.
Right.
Don't put all your eggs in one basket, as the saying goes. Spread your investments across different asset classes, sectors, and geographic regions to mitigate risk.
Right. Spread the risk. But what else can we be doing beyond diversification to get ready for this potential economic shift?
It all comes back to knowledge and understanding. Stay informed about economic trends. Learn about different asset classes and how they perform in various economic conditions. Develop a clear investment strategy that aligns with your personal goals and risk tolerance.
So basically, don't just blindly follow the hype or make impulsive decisions based on fear or greed.
Mhm.
Do your research, think critically, and make informed choices.
Exactly. The more you understand, the less likely you are to be swayed by emotional reactions to market fluctuations. Remember, the best investors are those who can keep a cool head and make rational decisions even when the market is turbulent.
That's a great point. It really is true what they say, knowledge is power.
It truly is. And that's what we're all about here on the Deep Dive, empowering you with the knowledge and insights you need to navigate the complexities of our world.
So to wrap things up today, yes, the economy is facing some potential headwinds. There's definitely uncertainty and volatility out there. But don't let the headlines and the hype dictate your financial well-being. Stay informed, stay curious, and keep diving deeper.
And remember, recessions are a natural part of the economic cycle. They may bring challenges, but they also create opportunities for those who are prepared.
So next time you see a scary headline about the economy, take a deep breath, remember what we've discussed today, and ask yourself, what's the opportunity here? How can I use this knowledge to my advantage?
Because after all, the more you know, the better equipped you are to not only survive, but thrive in any economic climate.
And on that note, we'll see you next time for another deep dive into the fascinating and ever-changing world around us.